Okay, good afternoon, guys. This is Simon with Trade and Perform Coaching. It is 9:29. We are here with Ben, aka at Ben. Is this right? At Red Ben. Is that correct?
At Red Ben Trader
At
on
Red
Twitter.
at Red Ben Trader on Twitter. If you have any questions about this coaching session or any other, if you're viewing it, you can email me here at tradeandperform@gmail.com. Ben is an awesome guy, and this is his first coaching session with me. And so we're just going to get started on the basics. Ben's coming from a background. Ben, fill me in a little bit, but from a more of a swing perspective, and he's trying to figure out how to pull money out of this from a day trading, scalping perspective. Is that fair to say, Ben?
That's correct.
Okay, cool. So what we're going to do is we're going to get started off with the basics of understanding him. So before we even go into the algo setups, let's just start off with some basic ideas. And that is understanding where your better trades come from, right? So we're going to start off with the profile. And as you know, we have that little saying in our room, right? Break the low, break the high or break the low to find the dough, right? So when you see that, like today's a perfect example, and we're going to look at NQ, right? Where was clearly the best opportunities is when you break a major area and where are the worst opportunities. So for those who aren't familiar, let me erase all my lovely drawings here. Okay, so this area right here, I'm going to draw an arrow through it. This area here, this is called the value area. That's where 70% of the prior day session, meaning from 928, that's where 70% of all the volume went off. Okay, so when you read books like Mind Over Market and they talk about value area and the ideal locations to trade in, wow, and that's not what I wanted to do there. Here, let's see if I can fix this. This is what I wanted to do. So this area where I put the little purple lines every day, that is the hardest area to find an effective trade. Okay, now the problem with that is when we're trading, the cycles change, right? Sometimes that's the only place you get to get a trade, right? Like today we spent, again, you can clearly see we spent over 70% of the time of the day inside of that area. But if you look where the best trading opportunities came from in the morning, look where the best short came from, above prior day's value area, right? That's why in Mind Over Market they call this would be considered unfair pricing underneath the value area. That is considered unfair pricing, right? So let's talk about that for a second. When we say unfair pricing, that means that we have fewer people agreeing. Like in here, they always use the example of a gallon of milk, right? Like when you go to the store to buy a gallon of milk, I don't know what it is these days. I think it's like $3 for a gallon of milk, right? So if one store has it for 305, another one has it for 325, another one has it for 315, another one has it for 295, and maybe at the high end this guy has it for 401. But it's all pretty much the same price, right? That's considered a fair price for a gallon of milk. It doesn't matter which supermarket you walk into. You're not going to leave that supermarket to go down the street to save a nickel on the gallon of milk. Does that make sense?
Yep.
Okay. But for that same reason in pricing, so this is really important concept. In pricing, right, if there's no reason to look for a better price, how much effort are you going to put into that idea of finding a better price?
Yeah, not a lot.
Okay, now we're going with an assumption. We're going with an assumption that that this is a fair price, right? No one in here is going to make much of an effort to find a better price. So how that relates to futures trading or stock trading, whatever you may be doing, is that this area is not going to get very well defended, right? Sometimes it's going to go all the way down, sometimes it'll bounce, but no one's going to make a great effort to try to save it within here one way or the other. So you tend to end up with more choppy stops. Does that make sense to you?
It does.
Or
Yeah.
scalps? Now, a lot of this is just simple behavior, right? So there's two keys to coaching someone and training them how to be a good trader, right? So I can explain the definition of value area just like I just did and make it very technical, right? But here's what it really comes down to. If you look at this chart, right? We highlight the value area, and then you pretend like it's a kindergartner, right? And you go, where did the easiest trades come from, right? Where did the behavior of other people, right? So like, where did the behavior of other people have the sharpest response? Well, you got the sharpest response from up here and from below here, right? And you don't have to be a rocket scientist to see that. You can see repeatedly, as soon as we got outside of the value areas, what do? They sent it right back into the value area. So this is a gallon of milk that we were negotiating. Everyone up here is going, hey, this is too expensive. I'm not buying it. You're going to have to push the price back down if you want me to buy it. And then all the suppliers, right, the sellers, the grocery stores were saying, hey, we have too many people buying it down here, right? That price is being aggressively attacked, and they're sending it back into value. Does that make sense? So,
Perfect.
so what that tells you is the first thing, from a strategic standpoint, when you're learning about value area, is the best opportunity comes outside of that value area, and the worst opportunity comes actually this little area right in here. So I'm going to erase the lines again, and we're going to talk about this little blue dotted area. This little blue dotted area is what's called the prior day's point of control, both from a volume profile standpoint and what's called the time price profile. This is the worst place on the chart to trade, and you can see why, right? Let's say you thought it was long here. Well, one moment it bounces out of there, right? Then the next minute it closes underneath, so you think, oh, it's short. Then it shoots straight through. Then it comes back over here. You think, oh, it's a good buy, right? I'm going to buy it here and it works. Next time you think it comes back, oh, but no, this time it's going to shoot straight through, right? Then you're going to go, okay, well, this time maybe it's going to reject. And it does reject out of there. So you're going to do the short again over here. It's going to shoot straight through. And then you're going to go to the conclusion of, oh, well, it shot straight through. That must mean buyers are in control. I'm going to buy it on the backside, and they stop you on the way back down. It's almost viscous, right? There's just a lot of uncertainty there. So one of the ways you can improve your trading almost instantly is just go, I don't trade inside the prior day's point of control. And that eliminates that problem. And Ben, over the years, is what I have found is that if you will stick with a philosophy like that particular concept, that point of control, if you just say, hey, I will not trade inside that area, yes, there'll be some trades that you will miss, and on some days it does work. Okay, but until you reach a level of expertise that you can tell when it'll work and when it won't, it's easiest just to stay completely out. And as a matter of fact, if you wanted to be a trader that had a very high percentage of wins, right, you would always stay out of that value area. Let me demonstrate that. Do you have any questions over what we just covered in that area?
I do. I completely agree with you. I totally understand.
Okay, so the way you practice that, the way you take that is you find a profile chart. So we're going to take this NQ profile and we're going to duplicate the chart here real quick. It'll take just a second. Okay, so the way you figure that out is you take any day here. You can do this with so the way I usually do it so that it's set up kind of almost automatically for me, and the way I learned it was I would take any given day, right? So let's just take that 920, right? There's two key areas on any chart, right? Prior days high and low. So I would just mark them off. Prior days high and low like this. And like this. Now for me, if I want to find a trade, those prior days highs and lows are really important because the majority of the time the market spends a lot of time in balance, and those provide a lot of great areas. So these are A, but B is followed by value area high and value area low. All right. And so Ben's been in the room for a little while now, and he knows what we're looking for in terms of the individual setups, right? But I'm going to go look at 921, right? So I'm going to take this chart of number 26. Let's fix this real quick. Okay, and then I'm going to go back to, just to make sure I have this right, I'm going to go back to 920. Okay, so I'm going to scoot back over here. And before I do that really quick, let me make sure I have day session only. I do. Okay, so here's 8:30 on 9:20. Right, and this is on a 15 tick range. So the first thing I do is bring it in. Right, and what I will see there is that is my, here, let's just change these colors really quick so we have a different color. Yellow, color, yellow. Okay, so this, when we start today, so the green lines are initial balance. I should probably remove them. Ignore the green lines for now to make it easy, right? So what I want to be able to do is where my best trades will come from, right, is being able to, first of all, I want to be outside of value. So what you can't see, so I'm gonna bring this in a little bit. There's value area low. This is prior day's low. This is value area high and prior day's high. Does that make sense? Why do I have two yellow? Let me do this real quick. There we go. And then there's one more. Okay, there we go. So the pink are prior days high and low, right? And the yellow are value area high and value area low. So when I look in here, the first thing that I know is if once I'm above that value area high, I am looking for potential shorts, right? So now I'm going to take it to the next step. So we know a couple of things. When we're looking for shorts, what do we want to do? There's this concept of being underneath the wave. And this is clearly the wave to the high. So we're going to add complexity to it. The first thing I'm going to do is this. Hold on a sec here. This will make it easier for you. Okay, there we go. So I know I'm in this area. And the first thing that what do I know about this area now? Now I know I'm in unfair pricing and there's a potential to reject, right? So that's just one piece of the puzzle, right? So the next thing we're doing is we're going to ask as well, is it trend day up? This is really not good. Hold on a sec. Let's reset this. There we go. I wonder what is going on. Hold on. Let's fix this here. There we go. So what I know is once I get over that yellow line is I need two things to accomplish. So look at this picture. When we get over there, we know we're in unfair pricing, but now we're looking for, well, hey, how do I take advantage of this unfair pricing? How would I figure out where my trade is going to come from, right? And we're not even going to discuss the algos just yet. So the first thing that we know is, the first clue is that this was our wave to the high, right? It starts right here. And this, I'm going to highlight it so you can see it really easily. So I know if I don't get underneath this wave to the high, right? So the first thing I would know here is I was like, hey, if I get underneath this wave over here, and I'm looking at it from this perspective right here at 8:32 in the morning, then I would have a bunch of buyers trapped above me, and I had the potential to travel all the way through value area. Does that make sense?
Yes.
Okay, but it's a giant wave. And I'll talk about the waves in a little bit more detail as we go through, but I want to make sure that you get the main concept. So I know I'm in unfair pricing, but now I have this giant wave, and we know that we really would rather not deal with these giant waves. So what we're hoping is that we'll come up in sequence and we will get a wave to the high. So see how I'm tracing those waves up? See how we keep making higher high, it pulls back and then it kind of goes on this series of higher highs and higher lows through here. Do you see that?
Yes.
Okay. And then all of a sudden, see how we make, so this is really simple part of the trading, right? We're clear that that's a new high on the day, right? As a matter of fact, it pushes right up to the prior day's high in testing that out. Do you see that? We've got above value area, and then it tests almost right up to the prior day's high, just misses or just tags it right there at 845, right?
Yeah, it gets a response from that previous day's high.
Okay, so now we're going to cut this in half. We're going to cut this over here because we have new information. So the reason why when I'm coaching you that I walk through it really slowly is I want you to understand this is our original wave to the high, but now we have a new wave to the high. I apologize. And this is very clear cut, right? This becomes our wave to the high. So we know two things. Once we get what's called an orthodox close, an orthodox close means on this particular range bar, we get a complete and total close underneath. And what that bar tells us is a lot of information. So that means that once you get that bar, that everyone who bought in here, all these people right here, they're all trapped, right? So let's stop and think for a second. If you had bought in here, Ben, let's say you decided, hey, it's going to break out, we're going to break to new highs for the day, and we're going to go trend up. So you bought in there. What do you think is your thought process, and what is your emotional process once it closes underneath that wave? How do you feel?
Yeah, you're emotionally charged because you are now losing money, and you're looking for opportunities to get back to break even. Which, yeah, you're changing from playing, your trade and looking for your target to realizing that your trade is not working.
Right. I find it's even further than that, right? So that's the intellectual answer, right? But haven't you found yourself emotionally kind of torn between the two? I don't really want to sell it. It's not down that much. And we really haven't, broken the swing per se. And this is just a
Yes.
pullback. And then this is where a lot of traders get in trouble, right? Maybe I'll add to the trade. Maybe this is temporary and it's going to continue on its way back up. I'm really not buried yet. You start kind of negotiating with yourself and you kind of get torn like intellectually you may be pretty clear, but emotionally a lot of traders get torn at this point, right?
Okay, sure.
And the whole point of the process is to set you up so that you're absolutely crystal clear. So at this point, it doesn't matter, like when I'm trying to put in the thought process, it doesn't matter to me anymore what anyone thinks. All I know is once I'm below that wave, I'm switching to shorts. Why? I'm in unfair pricing, right? So that's to my advantage, right? We know that everyone's been buying there has been buying at unfair prices, right? They, for whatever reason, think these higher prices are good opportunity, right? And that they are now in trouble because not only are they buying at unfair prices, but now we're underneath them, right? The market has gone underneath them. So it's much like when you buy a brand new car, right? You think it's great, right? But then after you owned it for a week, you realize there's no way I can sell this car. Well, prior to current environments, there's no way I can sell this car for more than I bought this car, right? Like no matter how shiny and nice it looks, it's worth less than what I bought it, and I'm kind of stuck, right? So what I'm looking for now that I have that change is this is where all the algos start to come in. And I want to point out, right, that even though the algos worked on the left side, right, once I'm underneath that wave, now I don't have to think. I'm looking very specific, and I'm looking for very specific things. The algo with the diamond underneath, so I'm going to point them all out. 1, 2, 3, 4. So in that time frame, there was 4 bars that printed with algos that were 1 bar stops because we're interested in risk reward. And all those bars, all the way across here, I would say, make sure I'm getting it right, I would say this bar stopped even though it went to profit, but that was it. All of these bars, so remember, what's our job is to grab money out of the market, right? A lot of people get confused as day traders because they want to capture the whole move or get the whole read, right? But the first question is, you have to tell yourself a truth in your head, right? You have to know the truth in your head. And so the first thing that your brain's always going to ask is this true because I know it's true, or is this true because Simon says it's true? If you're going off of it because Simon says it's true, you're sunk, okay? Because there's going to be times Simon's wrong, or there's going to be off days like when we're getting a lot of Fed information where they won't work as smoothly. But on this day, right, if you took this trade, right, and let's say you're a one contract trader. So let's say you just had a 10-point target each time. You risk, actually the risk here would be 13 to 24. Let's just say you had 12 points risk each time. Let's see if you can get a one-to-one risk reward, because that's your first question you have to answer is, even if my win rate's above 50%, which it is, can I get my one-to-one risk reward? And you have to back into this thought process, not do it the other way, right? Like do it slowly and baby step it to start with, right? So notice in all this conversation, we're not talking about is there excess at the high, where does the high and low of the day, what is the market trying to do? We're just looking at very simple concept. We have trapped buyers stuck above us, right, on the checklist. Next, we have these algo bars firing right over here. So now let's go, without getting overly complicated on what the different algo combos are, we'll go through that, right? But let's just focus on one algo. If we took this trade right here, right, what I measure is the maximum favorable excursion. So let me clarify that. Most people measure maximum favorable excursion as what they took on their trade. I want the MFE that I took on my trade, but I also want what the actual MFE that was available on the trade. Does that make sense to you?
Sure.
Okay. So the maximum available, if I shorted 15, let's just call it 15.13 for quick math. The best I could have done before it kind of did any kind of U-turn, any kind of meaningful U-turn, would have been 15.093. So if I shorted 13, right, clearly I got my 12 points, and the reality was that there was 20 points available in this one trade. Now let's stop for a second, right? Ben, I know you work during the day as well as trade, right? And you're trying to work your way towards becoming a professional trader, right?
Right.
And one of the things I notice that people lose track of is the math of trading. They're always trying to make it all in one day, and I think it's a mistake, right? If you capture one contract with one trade and you make either $200 or $400, right? For most people, right, making $400 a day, I think $400 a day is about $120,000 a year. Does that sound correct?
Yeah, it sounds right. It's pretty good.
Yeah, $400 a day is about, now, I'm not saying you're going to make $400 a day every day, but I actually find the opposite too. I see a lot of people go, well, I only made $400, right? Which is to me kind of like saying, I only made $120,000 for showing up to work all week this week, right? Like that, or this year I only made $120,000. Most people kind of look at you kind of like, huh? Right? Like that's a weird response, don't you think? Yet the people are willing to go to work for 8 or 9 hours a day to collect that same $400 or $500, right? Plus all the taxes and all the other stuff that come out of that money, right? So let's keep going through the sequence now. Now remember, we're not looking for a long. Why are we not looking for a long here?
We're under the wave to the high.
Which means, so we
Trapped.
right. So we want friends when we're trading, right? And these are our friends, right? We want friends who are stuck and that are going to help us push our price down, right? So let's just assume you took your 10 points here and you get your next setup right over here. So the first question is this a valid setup, right? So it is an engulfing bar. It is underneath your wave to the high. So you could take this again with a 12-point stop. Clearly you were able to achieve your 12 points and your maximum favorable excursion on this trade. Here, we're going to erase this for a second. Would end up going from here to here. So again, that's 09 to 87. So that's clearly another 20 points or $400. So just on one contract, you're either at $400 or you're at $800, some variance thereof on those two trades, and it's 8:52 in the morning, right? So what I want you to see right away is because we have our trap sellers, trap buyers, and then we get the algo to kick us in and tell us where the reversal's coming from, right? We now have a huge technical advantage. And let me ask, when do you think that advantage will change?
When will it change?
Right, when will that
Uh,
technical advantage change?
when the market starts to like make new lows, I guess, and people start coming in, right?
This is that's a very good answer, but it's not the right one, right?
Okay.
The tactical advantage will change when you get what I call an orthodox close above the wave to the low. So see how each of these waves, we get a low, we get a low, we get a low. So in order to change the pace, we've got to get what's called an orthodox close above here, which means you get a bar that has no physical contact with the wave itself to the downside. Until then, these guys are totally stuck, and you can continue pressing your advantage to the downside until such time as we get above the wave to the high, or there's some other key area, right? And you got to remember when you look below us, what's underneath, right? What's underneath is the bottom of the value area, right? So this whole area, the promise in this is that you have potential to catch a trade that could go all the way through here, hypothetically, right? But where people get confused is, so we've shown in here that there's been 3 clear trades, and each trade was worth $200 to $400. You see that? And it's just 9 o'clock in the morning because you had this trade, you had this trade, and this trade, and all of them produced 10 to 20 point extensions, and all of them were taking place in unfair pricing, meaning we were above the prior day's value area, which means we're above acceptance, and it is harder to continue pushing, and you didn't have to start taking action. The difference between this side of the formula and this side of the formula where you're making all your money is you now have someone on top of you who's helping you out because these guys are panicked and are having to get out of their trade. Does that make sense?
It does, yeah. I think where I get not confused, that's not the right word, where I get influenced in the market when it's live, is that you make that first extension, and if you miss it, then you see the next one set up, and my brain goes to, am I going to get a good enough risk reward to take this a second time, rather than just asking myself, have we gotten an orthodox close above a new way into the high? If the answer is no, then
Okay, so this is a new process, so let's write it down together. Get out your journal. All right.
I've already got it up.
Okay, great. So draw that picture, all right? And this picture, you're going to draw that, and you're going to go, this is the wave to the high. Okay, but now you got to put definition in your brain as to what wave to high means. Wave to high means that you have buyers that are trapped on top, and they are going to be willing to sell to anyone who will pop up there because they're trying to get out of their trade. That's what wave to high means. It's a new definition for you. Okay? And they are your friends. Anyone who's willing to help you sell when you're trying to short are your friends. So what you said was very important because that means that you have uncertainty about what the market's going to do. And what I'm trying to introduce to you via this process is certainty. So you've got to answer a question. And this is how you do your homework. And again, we're going to put this, when the software gets installed on your desktop, it'll be easy to see. So this is how I want you to solve this. We're going to step away from this idea for just a second. We're going to come in here. So we're going to look at charts. So do you see how we started rolling all the way down? See how we came down, 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 all the way through here, right? Finally, we got to a low, and this low, so you're going to highlight it. You're going to go, this low, this is the wave to the low, okay? And we got an orthodox close above. For the moment, forget that we're inside value. Just go with we're above the wave to the low. okay? And that occurred right here on this bar. Do you see that?
Yes.
Okay. So the next thing your brain wants to know, so your brain is very important in this. And what your brain wants is assurances that you're not going to harm yourself, right? That's more that we want to know. It's a dangerous environment. It's a very fluid environment. And we want to know more than anything else what's true and what's not true, right? And the problem with trading is we get so much information, right? People talk about Fibonacci lines. They talk about Fibonacci extensions. They talk about order flow. They talk about support resistance levels. They talk about prior day's low. Like there's a million different ways to slice this up, right? So what I do in order to learn, and what I want you to do is homework, and we're going to get this on there so you understand, is the first thing you have to understand is when you get this wave to the low right here, and you get above it, right? These guys are going to be your friends right here. All these guys that are in here, they're all your friends. So when we get above, what do your friends do? See, when we push back, your friends don't like to be the sellers down here at the bottom. See, that's what are they going to do? They're going to buy. They're going to buy. And they're going to keep buying until you get underneath them, right? So
Right.
even if it's temporary, because remember, what are we? We're day traders. So I want to show you something. There's a process within the process, right? So I'm going to erase this for a second. Now, this is my wave to the low over here. This is my close above. Right here, orthodox close, right? That idea that orthodox close is very, very important. Okay. And so then we come down and what are we looking for next? What were we looking for on top?
On top, we were looking for the algo to fire once you get beyond that wave. So this time we should be looking for the same thing now that we're beyond the wave to the low.
Right. So now, is that not what we got right there?
Yes.
Okay. Now remember, are you trying to figure out, as a day trader, are you trying to figure out the whole market and what's going to do and whether it's going to go up 1,000,000 points or down 1,000,000 points?
Nope. And this is where I get stuck. So, right, I hear you. No, we are not looking for that. We're looking for an extension, and that's all. It's like a piece of the day.
Right. So your entry for simple math was 15,031. And it went from 031 to 052, meaning there was another $400 potentially available, and certainly the one-to-one risk reward that you were able to get there. Does that make sense?
It does. And I think the important thing that I need to remind myself about is not only is it the $400 per contract that's available, but it's it's the highest win rate entry available there, even though it might not be, in this case, it is the biggest extension, but even if it wasn't, the fact that we wait for this process to occur before we enter means we're less uncertain about whether or not we should be in the market at that point as a long trader.
Exactly. So remember, at this point you've seen it's 9:35 in the morning, right? I believe you've had one stop and 4 wins, right?
Right.
Your one stop was for 12 points, and let's just assume that each of your wins were for 12 points, right? Which means you were net 24 points, right? Or $450, $500 for the first hour's worth of work. That's important to a lot of people to know, hey, can I pull the money out? And where did that start from? So this is where you'll see me struggle in the room when people forget this. The start of the conversation begins with, do I have anyone trapped above me or below me that's going to help me out? Right? That's the first question. Now, you'll notice within this process, see this up here? See how we made 3 distinctive highs? 1, 2, 3, right? So
Right.
we're going to cut this for a second. Now, none of this answers how do you get none of this answers how do you get the big trade. We're not worried about that here. All we're trying to do is put capital at a high win rate on the table.
Yes.
Right?
Okay.
So this ends up being your wave to the high, right? Which means if I get underneath this, what does that mean to your brain? What
If
should
you,
I tell your brain?
if you right. If you get underneath the wave to the high, you should no longer. You don't want to be trapped with the buyer, so you shouldn't be buying. You should be looking for short opportunities.
Right. So now let's see what sets up. We'll just go bar by bar. So we're not looking for these longs at all, right?
Right.
So that's my first engulfing bar right there, right?
Right. It's got algo in it.
So instead of trying to figure out which one will work and which one won't work, because sometimes they'll stop, right?
Right.
What I would have preferred is it actually push up here, but let's just take them all step by step so that they don't all look like we're just looking for the winners, right? So there's my first trade.
Sure.
I've got 12-point stop. So that one's going to stop. Well, no, actually it didn't stop. Okay, it looked like it was
Right.
going to stop, but here, just so everyone's clear, and just so you're clear, right? This would have been my entry right here. We'll call it 09. Okay, 9 would have been brought up. 19 plus 2, 21 would be my stop. Oh, wait, it's the other way around. It would have been 08 plus 10 is 18 plus 2 would have been 2050. Okay, so that
So
would
you're
have,
just taking your 12-point stop because of the size of the raincoat, just to make sure I understand.
yeah, that's correct. So that's going to be my stop.
Okay.
So this is my entry, and now I'm trying, and what am I trying to do first? If I entered at 08, I am trying to get 12 points, which means I'm going to go for 98 plus 2, 96. This is what I need to achieve right here to get my one-to-one risk reward. Is that line right there? Okay, we'll see if we get it or we don't get it. Again, this is a couple days ago, so I have no idea. Not yet. And finally, I think we can call that you got it. You certainly got it there, right? So you got your one-to-one risk reward. You wouldn't have taken this next trade because you're already in the trade to begin with, right? And then, so we're not looking for a long still because we're not above a wave to the low, right? So right there, that's another $200 on your plate. And I'm not going to discuss whether you should scale and trail or what you should do. Right now, all I'm interested in teaching your brain is the two steps of the process. Do I have a buyer or seller trapped? Can I get my one-to-one risk reward? Those are the two most fundamental questions you have to ask as a trader. And realize it's 946. You're now up almost $600 or $700 on the day if you traded one contract, one mini, right? You've taken one stop and everything else has paid you. Does that make sense?
Yes.
Okay. Now, realize if you don't stay on process, see when you went into your earlier explanation, well, are we trying to, we're going to auction back to the low? How's the profile going to fill out? That's all great information for swing traders, right?
Right.
But you're a leveraged day trader, right? You want pinpoint accuracy in your decision-making process, and so you have to know things that are true. So the first thing you're going to notice here is when you look is that you got this wave to a low. See this? I'm going to count this. This is a little bit funky the way it worked, but this is going to end up being our wave to the low right here, these 4 bars, 1, 2, 3, 4. And so there's important things going on here, so we're going to cut this. This is now my new wave to the low. So what does that mean for me? What should your brain be saying at this point?
Your brain should be saying that there are sellers trapped in that zone, so you should only be looking for longs.
Right, and
once you box close above it.
Right, and we're going to look for a specific. We're going to look for a specific long scenario, right? So,
yeah.
So remember, we're trading the process. We're trading the process. So there's two things that you know here, right? That you have to tell your brain. Number one, if you were a swing trader and you simply took the long here, just like over here, right? Mm-hmm. Just like over here. If you took the short, where were we earlier? If you took the short here when we closed underneath and you put your stop above here, did you go to profit?
you got some profit, yes.
Okay, so that's important because that tells you that the wave and trapping those buyers is important because you have to know that that part's true first. It's the first part of that element of understanding why it's going to push to second direction. So one is the general understanding. So now I can have this concept. If I buy this bar doesn't get invalidated unless I get an orthodox close underneath 14,996. Does that make sense?
It does.
Okay, so I could reduce my leverage. I could buy one micro, put the micro on here, put my stop down here, and we could see how I do. And since I'm leveraged, I could buy this one trade with a 12-point stop. So let's see what happens in both cases. Okay, so that trade got stopped right there. If I took that long, that's a minus 12. Okay, so
That's
now
that second long based on the algo you're saying got stopped.
that second long, that long with the algo got stopped, but I'm going to come right back over here because remember I know my process, so I'm going to take it in sequence. I'm going to take this trade right here. Again, I haven't looked at this date, so I have no idea if this next bar stops or not, right? But I can tell you I'd be long right here on this trade. I'd come right back at it and take the trade right here. So remember, there's two different potential trades going on here. I could simply take my long right here and my stop down here and know that it's probably going to go to profit because I'm above my sellers. Does that make sense?
It does. Yeah, that definitely makes sense to me as an swing trader. That kind of setup makes a ton of sense.
Okay, so now you're seeing we're in a case. Now you'll notice I'm getting that 949. See how that stopped again? So I want to pause you for a second. If I took two stops like that back to back, I would probably stop taking this area. Okay, even though I know that trade's going to work. Why? I don't want to bury myself. Usually it works right off the bat. So let's see what happens here. And that one worked, right? See that? It finally pushed out.
Yeah.
That's all right. That's all right. Now I want to show you two things. All we're trying to do accomplish with this algo is get high odds win rates, which means you have to limit the number of times you take a trade. Now, I'm going to discuss that a little bit. So I'm going to pause for a second and discuss that with you. So number one, let's contrast our two buyers. The guy who just bought here, the trader who just bought right here on this bar, did that trader get to a profit before getting stopped out? Right? We can cheat. You go look. Yes, he did.
Probably did.
He bought here and it got up here. Was it a great trade? That's up for debate. But that trader made money, right? Do we agree on that?
Yeah. He exited. Yes, assuming he exited. I see what you're saying, though. Yes, he got
Well,
into
he had
profit.
the opportunity to get out of that trade profitably. Does that make sense?
Yes, he did. Yeah.
Okay.
Yes.
Now, what we're doing, because we're trying to use leverage, is pinpoint the entry and exit, right? Which means we have to limit the number of times we're willing to make a decision in one area, which means we need a little bit of luck. So I'm going to switch gears for a second, and I'm going to show you how you increase the odds on that trade. Okay, so I'm going to erase all this.
Okay.
And it's very, very simple. When you are coming, so remember, this is where we were above. This is our seller. Okay. Now what I'm looking for is when we push back down, I'm looking for the highest volume to come at the end of a wave that's greater than 2 bars. So at least a 3-bar wave. Okay, we'll discuss the 2-bar. Remember in the room I said the 2-bar combos can be confusing, right?
Yes.
So
Yes.
I want you to focus on waves that have at least 3 bars to the wave. So these are the white waves are the down waves, and the green waves are the up waves, right? So I want at least 3 bars in that wave. So once I get 1, 2, 3 bars, now what I want on that third bar is before I hit the bar with the algo, I want that bar in either the last bar or the second to last bar to have the most volume. Does that make sense? Because I'll say it again. So when you see this wave here, so when we see this wave, does this bar qualify?
So we've got no.
Why doesn't
Right,
it qualify?
We're looking at the red volume bars, right? And
Right.
oh well, it's only So the last one was not the highest red bar.
Correct. Okay. So then as you're coming through over here, Now you've got a wave. So does this bar qualify?
So
Does this bar qualify?
let's see. So
So
okay,
I'm going to
so
put a
we've
line
got
there so you can see it. So look at the volume. The volume's down here. The wave is here.
right
The volume's down here. So clearly, neither one of those two bars has the highest volume, right? That's back over here.
higher wave. I see what you're saying. Compared to the white wave above it, no.
Okay, so now look at the third bar. Okay, so there's your engulfing, the algo's firing, right?
Right.
Now look at the volume. Does the volume qualify now?
Yes.
It does. So now you get the rotation up. So in the room, when I'm saying, okay, so all these bars with the algo on top have the potential to be big winners. But when they're tied with the volume, that's when they really have the potential to lift and out of, and that's what would eliminate your stops in the
Yeah.
process. Does that make sense? So you take out this one, you take out this one, and now you're just left with one winner, which again would give you 10 to 20 points. On the upside, your entry would have been roughly 12, and that extended up to 28. So you had 10 to 15 points, or almost $300 to $400 a contract in there, right? And then something else
Right.
very interesting happens. Now we can flip it the other way. So now we know, right? Because we just had that conversation. So watch how I'm flowing it. This is the wave to the high, right? Which means I'm
Yes.
now, so now if I'm a trader, I can simply take this bar and short it. And as long as we don't close above here, that's one way for me to trade that, right? So now when we go look, so we're going to cheat for a second. Now we're going to go look. We already know this fell away to the downside. See that? It went to a if you shorted here, right? It went to profitability prior to pushing back up. Do we agree with that?
Yes.
Okay. So next, what are we looking for? We are looking, if we want to short that, we are looking for, again, for the algo, which we don't get here. Why? What do we need? The first thing that we needed was an up wave that had at least 3 bars to it, right? See that? We needed an up wave that had at least 3 bars. Now, see how you got it? You got a bar with more than 3 waves. But what happened in this? What happened in that concept?
Well, there's no, the last volume bar is not there, and it also went back into the, let's see, yeah, we went over to the wave. Let's see.
You got it. You finished. You
Right,
did it correct.
Yeah.
You got above the wave to
Yeah.
the low. So what are we looking for now?
We're looking for longs because we got back above the back of the wave to the low. Yeah.
That's right. So see how we're not worried about where the market's going in general here? Where you can look at it and you try and figure it out, but all the answers, this is the same process repeating over and over and over again. No matter where we go on this chart, this process repeats, right? So now what am I looking for? An up bar, and I'm looking for a short. Now notice when I look at these, right? Now that I've got, so I'm looking for my longs now, right? So now I'm looking for pushes down where the highest volume comes at the end, followed by an algo. So I don't get that here, right? I don't get that here, and I don't get that here, right? I'd have liked to, but I just didn't get it, did I? Not the one we're looking for. Like this one doesn't qualify. Why does this not qualify?
Let's take a look. So that one you had 3 bars up before
Let's
it.
see. Oh wait. I lied. I take it back. I lied.
Yeah,
1, 2, 3. Let's see if that last one had the volume on it.
close.
We're gonna find out. The highest volume wasn't the last one. See that? It's actually this. Yeah, I'll make it bigger so you can see it.
Oh no, I see it now. Yep, you're right. It's not as big as the first one. First
Right.
down bar had as big as. Yeah.
So what's the rule there?
So we don't want to be looking. We want to wait before we take a long because it's unlikely to follow through.
Well, no. So instead of unlikely, it has lower odds of following through.
Or lower odds, yeah,
Right.
lower odds, right.
And so in this case, what I'll hear a lot of time from people I'm coaching is, well, you missed the whole move, right? So first of all, let's go back to our people, right? Did the guy who just bought here and put a stop here, did he get to profit?
He got to profit. Yes.
Yeah, no question, right? But we are asking a little bit more because we're playing with a
That's right.
we're playing with a more loaded deck, right? We can suffer more damage, so we need things to be more perfect for us, right? We need to strive for more perfection in our entry. And there's other entries there, but we'll talk about that later. We need more
Sure.
perfection in there to get that trade. So what you'll see there is it pushes up. So let's just walk it through the rest of the process. Then I'm going to go get my kiddos from school. So as we're going up, right? So now notice, so I'm going to erase these lines so you can see. So now we're going up, right? We get an A, B, C, D, an E, F, right? So right now that's my wave. That is my wave to the high right now, right? So
Yes.
I need it, as of right now, I need to get underneath this guy to go lower, all right? So let's just keep tracking through. Okay, now what did I just have right there? Now I can move my wave, see that? Right now,
Right.
so let me ask you something. In this process, right, because we still have buyers in control, right? Sellers are trapped. So when we had these 3 bars down, this bar didn't qualify, right? Highest volume wasn't there. We're looking for the next wave. So 1, 2, 3. Second to last bar had all the volume. See that?
Yeah. Yep.
That means this is a valid entry, right?
Yep.
So the first question we're going to ask, because our brains want to know, is if I took this at 23, was I able to get to 25? Because that's my 12 points, right? 23,
Right.
35, excuse me. And I was. So was I able to get my one-to-one risk reward out of the trade?
Yes.
Yes, you were, right? So now you see why when I'm in the room, I'm pushing, hey, make sure you've got exactly what you're looking for lining up in your trades. Does that make sense? Now,
Yeah. Yeah. Yeah.
now when you look at this, what happened here? So let's hold on a second. So now this became my wave to the highs, right? So you got to have this down. So your brain has to know what just happened right here.
New wave to the high, and then it got underneath it.
Therefore, all these people, what are they?
They're trapped buyers.
That's right. So now what are we looking for?
We're looking for shorts.
Which means we want at least a 3-bar wave up with the highest volume bar coming last or second to last in that 3-bar combo, right? So
Followed by no go.
we may not get it. There's 1, 2. So do we take that? Not at this stage. You're not advanced enough, right?
Right. Right.
Okay. So we're looking for a very specific setup. Not yet.
No.
Okay, now I want to hold on a second. I want to stop there. What I will often hear from people on coaching, so again, let's go back to the concept of the client. Is the guy, this is the first orthodox close underneath, right? So, because this goes back to training your brain to what's true and what's not true, so you can operate in a highly volatile environment, right? So, the guy who sold this, did he make money?
Oh yeah.
So, that particular gentleman or lady, right? How's that client feeling about this process so far? That guy just sells underneath and then he takes some random profit. Maybe he doesn't has a process, maybe he doesn't, but he's had an opportunity at this point on this day 100% of the time to get out of that trade profitable, right?
Yes.
Now, his risk reward may be totally jacked up,
Uh-huh.
but he's made money every single time, right?
Yeah.
Okay. I will hear a lot of people say, but I missed this whole move here. So let me help you with that. Okay.
Yeah, my brain does go there for sure.
Right. So you have to make a distinction between I trade what the market does and I trade my process. Did your process give you an entry on that trade?
Not a high odds entry. Nope.
Not the highest odds, which is what we're focused on right now. It
Yes,
did not,
that's what I mean. Not, yeah.
right? So I want you to constantly rework that idea of I'm not, because I hear you say that in the room a great deal of the
Mhm.
time, and I want you to refocus that to to my process set me up or it did not. Like for example, so let's just follow this out to natural conclusion, right? So the first thing we're looking for now, so within this process, right? Within this process, let's see if we got set up anywhere for a short, because remember, we're still not above a wave to the low in any of this. But I can tell you already from looking at this, you just didn't get the short setup on that thing. Just went and it just didn't give you the short setup, right?
Yeah, it looks like consolidating now. I would agree.
Right. So we're just going to follow this to the natural conclusion to see if we can get above a wave to the low. So right now, this is my wave to the low, right there. That is my wave to the low, and I haven't gotten above it. Therefore, so wait a minute, therefore I can make a conclusion. If I can get any of these to give me the last volume bar, any of the up bars to have the highest volume, so like this was
Mhm.
close, but it didn't give me the algo didn't fire on it. See that?
Yeah.
This one didn't qualify. This one
No.
didn't qualify. This one didn't qualify. And that's all okay because you're only trading the process. See, if you take away the variability and you go, I'm just trading the process that gives me money, right? So imagine it if you went and played blackjack, right? Let's say you had some kind of special sense that told you every time you were going to hit 21, right? Now you might have to sit
Right.
through 50 hands of doing nothing, and then you go, oh, this next hand's going to be 21, I'll bet, right? View it that
Yeah.
way, right? So when we go through this whole process, right, we're still looking to get above or below. So now we have a new wave to the low, right? So we're going to carry this all the way through to its natural conclusion. So hold on a sec. This is now my wave to the low. I can erase this now, right?
Right.
This is now my wave to the low.
Yes.
Okay, are we qualified to get above the wave to the low yet?
There's no orthodox close above it.
That is correct. There's nothing to do. Not yet. Not yet. Now. So first of all,
Yeah.
that's our wave to the low, right? If this person buys, so now we go back to our friend, right? If our friend goes long here and he puts a stop here, let's go cheat and see if he makes money or loses money. Uh-oh, he's nervous. He finally had his first stop of the day. You see that?
Yeah.
He
Yep.
finally had his first stop of the day, right? And it was a doozy of a stop too, on top of that,
Mm-hmm.
right? So now let's go back to
Mm-hmm.
our process, right? So we're above. So now what's the first thing we're looking for? We're looking for a pushback, right? There's only one bar that actually there's two bars can set up. So this bar didn't set up. Why? I already know because if I do this, right, that was the bar, and the volume didn't come anywhere close. See that? Then
Yeah.
I come over here. Now this one did set up right here, right? Second to last bar
Yeah.
had the highest volume. I got the algo fire on top. I have a 12-point stop and a 12-point target. So this is my entry was 30, and I did not make my target. It went to 37 was the best I could
Yeah.
do, right?
Right.
And this became my wave to the high. So wait a minute. Let's talk about our friend for a second who lost all that money. He actually didn't lose
Right.
that much money. Why? Let me tell you why. So we lost 12 points there, right? And hold on a second. So remember I told you the afternoon gets harder than the morning, right? So see how
For sure.
we're over here at 1301? We haven't closed below
Yeah.
the wave to the low. Do you see that? We have not
Yes.
orthodox closed. That means this is a valid entry and we're stopped again.
Okay.
And now we have a wave to a low. So let's go back to our friend for a second. If he was following the process correctly, he went long here and he flipped short right here. Does that make sense?
Ah, yeah,
Why?
it does.
That because he's underneath the wave to the high. Does that make sense?
It
And now
does.
what are
It
we
does make sense.
looking for? Now we're flipping the script, right?
Right, we're looking for shorts.
So he's making his money back. We're not doing anything once again because it just fell away, right? See that? So,
Yeah.
and that's okay. It just kind of fell apart there. And realize in the room, we have other ways of capturing that trade, right? Like the first thing I would have said is this is a head and shoulders right here. Like we have
Mhm.
other ways of capturing it, but I'm trying to show you just the highest odds way of taking it. In this case, you would have taken 2 stops in a row, right? And that would have sucked. But in the bigger picture, right? So remember when I tell you the easiest times to make money between 9 and 11, right? Why? You
Yeah.
get less variability, right? But then you're also going to notice over here, we're going to cheat, right? So our friend who took a loss, but then he flipped again, and then right over here, right? That's our wave to the low right there, which means what? We're now looking for longs over here, right? And something had to be going on there because some kind of news hit or something because you can just see the whole thing shifted. We went to kind of an impulse move to the downside. You'd have had to come out of this pretty quickly, and you got to account for variability. And again, in the afternoon, you can see how we set up an inverse head and shoulders there. But the fact
Yep.
of the matter is, this was a valid long. It did not go 12 points, and you had to know to get the heck out. Obviously, something changed
Yeah.
in this particular case, right? And importantly, you're on the verge here. You're now back underneath the wave. As a matter of fact, I'll take it back. That's the wave to the high right there. And you would have not taken that trade because we closed underneath the wave to the high. Do you see that?
Did we get under it?
Yeah, here, let me show you in more detail. This is actually a down bar here, so the wave up has to begin with an up bar. So that's a little fault in the
Ah,
programming.
that's thrown out. Oh, that's interesting. See, I didn't. Okay. Okay.
Yeah, that
I've been doing.
that's actually part of the down rotation. It actually starts there. I don't have a way of reprogramming that. You just have to catch it in real time. It
Okay. Yeah.
it usually doesn't
Like
happen,
that.
but it does. But we are underneath that wave now. See that?
For sure.
So
Yeah, absolutely.
you're not taking that at all. As a matter of fact, you're doing the opposite. Actually, what you're
Yeah.
doing here is you get a it's not even a 3 bar combo. It's pretty messed up. They
Yeah.
just got underneath it,
Yeah.
backside tested, and flipped it down, right? So
Yep.
when you're looking back over here, so again, what's happened is you've taken out the low. So when you
Mhm.
look back over here, this became the wave to the low right here. So remember, this is pretty late in the day. So what are you looking for now? Now you're looking for longs, right? So
Yeah.
let's see if it
Yeah.
set us up. I wouldn't be trading this time of day. I'm done already, but I'm looking
Yeah.
for. So this is, by the way, is a valid entry. If it gives me, even if it doesn't have a little dot on it, if it's a speed bar, that blue speed
Okay.
bar is valid for me. Okay. And it takes off. And it's the same question again. If you had taken this, right, does it give you your 12 points? And it clearly does, right?
Hmm.
And then you're into the
Hmm.
last hour, so God help you because anything is valid at this point. It's just a no man's land. I don't trade the last hour for this very reason, but you can see it did take off. Let's see if our friend survived. I don't think he did.
Doesn't look like it.
Let's see, wave to the low. He needs an orthodox close underneath to invalidate his trade. Actually, I take it back because here's what we would have done. Here's the wave to the high. See that right
Yep.
there? See how that became the wave
I
to the
do.
high? He would have, so we would have shorted right there. Again, I don't trade the last hour. We would have shorted right
Okay.
there with a high volume bar to the
Yep.
downside. And then this became the wave to the low. Our friend
Mhm.
bought right here and he got paid at the end of the day. And we did
Yeah,
not
look at
because
that.
it never pulled back. It just took off. I remember this day actually. We were down hard this day. This is 300 or 400 points down. So it's usually not this hard. So what we've learned from this is a couple of things. And what I want you to do in your homework, Ben, is go through and look at the waves to the high, waves to the low, and how it behave, what the behavior is around those, right?
Right.
It'll help you immensely entering and exiting those trades properly. Does that make sense?
Yes, absolutely.
Okay. So in wrapping up, of course, you can send me questions before our next coaching session, and I'll send you the video
Okay.
momentarily. Do you have any questions before we drop off?
I don't think so. This has been extremely helpful.
Okay. Well, very cool. Well, I'm gonna get this. Let me get the video recording stopped. Maybe, possibly. Who knows? There we go.